Ladies and gentlemen, welcome back to the Breaking Bitcoin Market Update, your daily source for everything cryptocurrency markets and trading. I'm your host, Justin Wise, lead analyst at KrakenCryptocurrency.com. Hopefully you all are doing absolutely fantastic today on this quite glorious Tuesday. It is, of course, Tuesday, May the 30th. We are almost out of the month of May and into the month of June. Question resides, did everybody sell and walk away? Sell in May and walk away? Are you guys still hodling faithfully and loyally? We'll see the impact of that as we get to the charts. So we've got a great show for you today. We're going to be going over the latest news impacting the cryptocurrency markets. We're going to be going over the latest price action. We're going to try to predict what this information will infer for what price movements we will follow. We will break down today's trades, and we will also try to make money together as we proceed through this. Before we begin, if you'd like to support the show, you can easily do that. Make sure to subscribe if you haven't already so you never miss a daily episode, and smash that like button like it owes you money. Sharing the show gets us out there to more people. Always greatly appreciated. Free guide down in the description to supercharge your trading to get started with us today. Let's get going, ladies and gentlemen. The first thing I want to dive right into, we're going to be covering this in just a minute, but the first piece of news that I find very interesting in the continuing saga of the digital currency group is this latest article from the Bitcoinist that the digital currency group, or DCG, is pulling the plug on their product trade block, which is kind of the end of the era. So overall, in quick summary, if you guys didn't know, digital currency group is a huge digital asset conglomerate, which is the wording they use here. Leading digital asset conglomerate. All right. They are responsible for much of what we see. They own CoinDesk. They have many operations, and they were one of the groups that got hit hard by the closure of Silvergate and other banks that were servicing crypto-focused industries and crypto-focused companies. And their kind of debt relief, their creditors, has been one of the sagas underlying everything that's been going on in the markets, and certainly was the hot button topic when the markets were going down. But now that the markets are going up, it's kind of disappeared into the background. But anyways, they have announced that they will be shutting down their trade block platform or subsidiary, and this will be effective starting May 31st, 2023. So as of tomorrow, any institutional investor utilizing trade block will no longer have access to it. And of course, they've cited a challenging United States regulatory environment and the prolonged crypto winter, which kind of put them in the space that they are now. Now, this move is going to impact a lot of the institutional investors who currently rely on trade block. They rely on trade block for pricing services, for actual trade execution. And this is going to put a lot of current institutional investors in the Bitcoin ecosystem, in the cryptocurrency ecosystem, out. And of course, this is a result of DCG negotiating with its creditors because of its bankrupt lending division. That is how DCG really got into this trouble to begin with, because their lending division went bankrupt, made risky loans that couldn't be serviced as the crypto winter progressed, and put them into a bad space. Trade block has been around since 2013. It is a digital cryptocurrency trading platform. So again, think Kraken, think any centralized exchange, except it specifically caters to institutional investors, not retail investors. So of course, you would get trade execution, they would get market data, they would get analytics, and even management and custody of their digital assets. So again, kind of like a mix between a centralized exchange and a Bloomberg terminal is what these institutional investors were getting with the trade block platform. And of course, DCG acquired trade block in 2020. So it's only 3 years that they were able to get that. And that was a good deal for DCG at the time, because they were able to gain access to all of those clients. And at the same time, by acquiring trade block, they got access to a very skilled team of developers and individuals who are very familiar with the cryptocurrency space and industry. Okay. Overall, this was, for those in the know or for those following the news, this was not necessarily unexpected. DCG has been talking that this or hinting that this is going to be something that they have been wanting to do for a while, to deal with the bankrupt lending division, to find acquiescence, I guess, with their creditors. So the questions we have to ask ourselves is, what, if any, impact could this have on the broader cryptocurrency markets, right? We often talk about the importance of whale watching, or watching what smart money is doing, or watching what institutional investment is doing. Well, in this case, what is institutional investment doing, or what will they do as a result of this? Okay, so there are three main ways I could see this impacting the cryptocurrency markets. So obviously, one, we have the loss of a trusted platform. All right. For many of these institutional investors, they've been utilizing TradeBlock. And you guys know how it is when you have a platform or a service or just something a certain way that you like it, that you're very comfortable with, that you're very familiar with. And then that kind of gets shaken up or goes away or changes. You know, often we are creatures of habit and we don't necessarily want to make that switch. Now, it might be a little drastic to say that as a result of this, we could be seeing, it might be drastic to think that as a result of this, we're going to see a bit of an exodus of institutional investment in cryptocurrency. I don't think that many individuals will just decide to desert their portfolios because they've lost access to their favorite trading platform. But the closure of TradeBlock will certainly leave a gap in the market. And with DCG citing regulatory uncertainty and sort of a inhospitable climate in the United States for companies that are trying to build in blockchain or build products and services to institutional investors, build products and services to those who are involved in the cryptocurrency space, who want to service the cryptocurrency space. You know, it might be a struggle for these institutional investors to find an alternative that offers that same level of service and reliability that they were receiving with TradeBlock, which again could have a short-term impact or even a long-term impact on the market. This shutdown, in a second way, could also just in general contribute to a heightened sense of market uncertainty. As you guys know, the most terrifying thing to market participants or to the market in general is uncertainty. We like it when everybody's bullish. We like it when everybody's bearish, but we don't like it when people don't know what's going on. Or to put that more succinctly, when everybody is when everybody understands or believes that we're in a bear market and the prices are going to go down, there's an acceptance, right? There's not a, oh my God, it's so painful, or everybody just kind of accepts that, even though crypto winners can be absolutely brutal, as I'm sure many of you in the crowd are very well aware. However, on the other hand, when the market is going up, it is that feeling of uncertainty, it is that feeling of we're not sure what we're going to do that causes people to head for the doors and initiates sell-offs, or even sometimes at the right time can initiate bear markets. So because TradeBlock was such a large institutional grade processing center, this is a substantial amount of volume for institutional investors that will no longer be able to easily be facilitated potentially without a big exodus to different platforms. So this closure could decrease overall trading volumes in the Bitcoin market, at least in the short term, until we see those investors find suitable alternatives. So we could see this being a catalyst that initiates a continued sell-off or continued movements down in price due to the fact of liquidity and volume exiting the market. And then again, yeah, so market uncertainty. So essentially, due to, again, we see a closure here. Are there going to be, subsequent closures of other institutional grade platforms in the future? Are there even going to potentially be centralized exchange closures? And for the American investor, and make no misunderstandings about this, American liquidity accounts for the largest pool of liquidity in the cryptocurrency markets. This is why, for those who are crypto native, why the decisions of American regulators, of American politicians are so important in the short and long term for the cryptocurrency markets. While it is my ardent belief, and we see this, for example, with Hong Kong opening up its retail offerings for individuals to trade and sell cryptocurrencies, trade, buy and sell, over in Hong Kong, wanting to be a Web3 hub. There's just not even though that's significant and important and can have a more long-term effect and maybe even a short-term effect when that liquidity comes into the market initially, having, anything that puts a roadblock in between American liquidity and the cryptocurrency markets is likely to have a negative impact on price, because that is just a big geyser. It's just a big river of money that you would essentially be shutting off from the cryptocurrency markets. And one thing that investors hate is uncertainty. They want to know that they can invest in something securely and safely and hold their assets. And they don't like the idea of having to purchase on a centralized exchange and then go seek out custody, and then the platform switches and now they can't find a equivalent platform. These things can all be quite bad. So market uncertainty and then reduced market liquidity, which could have a short-term impact. All right. Now, again, how this will all impact price in the here and now is really dependent on what alternatives these investors are able to find, and how quickly they can find reasonable accommodations for these services that they're already receiving. So I think this is very interesting. Let me know, guys, in the chat and in the comments, what effect you think this will have on the cryptocurrency markets, either positive or negative. But one thing is certainly for sure, that we are going to likely see a reduction in immediate volume and liquidity, certainly in the OTC markets, and that we are going to have a kind of an increased demand for new institutional grade platforms, or an exodus from this to other crypto-friendly institutional grade platforms. All right, continuing on with our saga of XRP and Ripple Labs. Obviously, we have a very heated situation in the cryptocurrency markets with Ripple Labs and the SEC, which of course has been the case for quite a while, with the SEC alleging that Ripple's XRP token is potentially an unregistered security, which would be, of course, the impact in the short term is considered to be negative. Lately, though, we do have this pro XRP lawyer. His name is John Deaton, and he's been making quite a stir lately due to some information that he found in some of the briefings as he was going over all the information and data. Give me 1 second here. I apologize. Okay. So again, this we talked about this on Friday, and of course we had Money Monday purchasing XRP yesterday. That was our Money Monday was purchasing XRP for our long-term portfolio here, and we have a lot of information here. So obviously, let's just go over what this article entails. The attorney who is pro XRP, his name is John Deaton, and in the past there was this very controversial speech from Bill Hinman, or William Hinman is his actual name. And what essentially John Deaton is saying is that the SEC's ethics office did not approve his 2018 speech that classified Bitcoin and Ethereum as non-securities without mentioning XRP. All right. Now he is arguing that if the ethics office had approved that speech, that it would have been publicly disclosed and not stuffed in a footnote somewhere. And that would have helped Ripple in its ongoing battle with the SEC if this disclosure was made. So essentially, just again, breaking this down, we have essentially the ethics office not approving a speech that would from someone involved with the SEC that was stating that XRP is likely not an unregistered security, that it does not pass the Howey test, which the Howey test being something is a investment of time or money into a common enterprise where there is a reasonable expectations of profits based on the actions of other individuals. So he is alleging, Bill Hinman was alleging that XRP would not be an unregistered security based upon those guidelines. So 1 second. So we have seen a significant uptick in, not as significant, but a nice uptick in XRP's price over the last couple of days due to this continued exposure and information. We have Brad Garlinghouse, who's the CEO of Ripple Labs, coming out and saying that it is very likely, or he believes that there will be a resolution to this court case, not this year, but very, very soon, within weeks or months. As we've seen XRP really consolidate at relatively low prices relative to where it's been, seeing this kind of upwards price pressure is nice, certainly at the very least for the XRP army out there. So in summary, John Deaton's revelation that the SEC's ethics office did not approve Bill Hinman's 2018 speech where he classified Bitcoin and Ethereum as non-securities without mentioning XRP. This lack of approval from their ethics office is raising the question about the SEC's official process, which there should be many questions raised about that, and certainly has implications for this current court case of the SEC v. XRP. And, you know, again, let's not, I think the kind of the elephant in the room when we talk about this situation is that Hinman himself has gotten himself into a lot of hot water lately. He's under scrutiny for possible corruption and conflicts of interest. He has reportedly received a significant amount of profit sharing from a pro-Ethereum law firm while he was in a key position at the SEC. And he continued to engage with that firm despite warnings from the ethics office. All right. There's even been a investigation into his conduct requested by the nonprofit watchdog Empower Oversight. So very interesting to see this kind of level of financial corruption at the very top, where we have assets like Ethereum and Bitcoin, obviously, which of course have done well for good reasons. And then we have an asset like XRP, which has its own case of believers, its own kind of infrastructure, its own community that has not received the same sort of treatment. And in fact, we've seen price languish on XRP for the last 2 years, while we've seen good gains for other assets. And potentially we have good reason why in the case of a little bit of corruption here. So very interesting. Let me know what you guys think, if this will have a positive impact on price, if this will have a negative impact on price, down in the comments. But one thing is certain, and that is that XRP is responding, and the XRP army is starting to come out of the woodwork a little bit. And we are starting to see, I mean, if you guys just go, for example, we'll go to Crypto Panic here and notice that all the trending stories today are XRP, right? We've got FOMO will kick into high gear when XRP's price roars past $2. We asked Google Bard what will be XRP's price at the end of 2023. XRP USD regains the 50-cent level as the greenback is sold, right? So just very interesting and exciting times, I think, especially for those who are holding XRP and anybody in the cryptocurrency space for the next couple of years. All right. Let's get over into our market watch, ladies and gentlemen, looking at the top 100 cryptocurrency coins and just keeping track of where we're at on the weekly. The Hex, Pulse Chain, and Pulse X community does continue to get hammered. We've seen some pretty significant sell-offs on all three of these assets. Hex has kind of bounced in between being down like 70% and 50%, and so now rallying kind of back up to that 50% level. Pulse and Pulse X, after Pulse did, after Pulse did a 2-to-1 and Pulse X really only did a 1.2-to-1. This is gain from pre-sale price or for value at time of sacrifice or time of distribution. We have seen an initial sell-off. And here's the thing, guys, as an individual who's invested in Pulse and Pulse Chain, in my opinion, really no cause for concern. The main reason being is because the trade is either going to work, the investment is either going to be successful given enough periods of time, or given enough time, or it's not going to be. All right. And there's no amount of, staring at the charts or trying to convince myself or whining, crying, bitching, and moaning in between here and there that's going to make the trade do any better or worse. So when you make a trade like that, when you get in at the pre-sale, you're looking for, 5 to 10x at the very minimum. I have not achieved that, so I will continue to hold until that happens. And being as Pulse and Pulse X are brand new coins with their own distribution system, this was to be expected. We went over this ad nauseum when Arbitrum launched. Arbitrum and new coins tend to launch and do an initial pump, and then they'll sell off and consolidate for a period of time before there's a full send on the price. And this is kind of just the way things go. Not overly concerned with it. And I'm just thinking of the long term for these two particular assets. We'll see how those go. Otherwise, on the weekly, again, while we seem to be having, if we go to the daily, we can obviously see that we're having a relatively positive day overall. XRP up 7.4%, RNDR back and climbing at 4.8%, Quant, the Graph, Lido, everything doing okay. We do, of course, have Hex, Pepe, Pulse, Pulse Chain coming down, Kava, Curve, Casper, and Optimism token down a little bit on the daily. But when we just see on the weekly, we are in a advancing state on the weekly. Things are okay on the weekly. However, just to keep things in real perspective, this has certainly been a bad month for cryptocurrencies, right? Overall on the month, things are in double-digit decline. So again, we're still in this consolidation range. Bitcoin moving sideways, and instead of altcoins taking this opportunity to shine, altcoins have taken this opportunity to give back some of their gains and consolidate right alongside Bitcoin and the majors as we kind of struggle between this range, looking for resolution. Okay. Let's get to BTC USD. Quick trade of the day breakdown, which will just be, excuse me. We'll get rid of vol USD. Okay. Yeah. So just a quick trade of the day breakdown. We did enter, this is Bitcoin USDT on Binance. So just trading the Bitcoin tether chart. We did take the 4-hour swing on Bitcoin yesterday. This was a reversal baseline bounce setup. So for those of you who are familiar with how our trading strategy works, we had price consolidating underneath the baseline. So obviously we were looking for shorts. And then as price broke above the baseline, we had two potential trade entries right here. And either on this initial breakout, this is of course a good breakout long trading signal. We have minks above zero, rising explosion level positive delta, and of course Parallax agrees, and we are above the baseline. So all the conditions are met there for a long position. And just looking for a swing up to 27,780 for TP1. And of course, if we get rid of Quadrigo and just take time forward a little bit, not that forward, we're just going to go forward. We of course crushed that, and as you guys could see, TP2, TP3 as well. So successful trade there, the 4-hour breakout, which was a possible trade. Now I didn't actually take that trade. I was not at my computer for that particular price movement, but don't worry, several hours later we had the trade where I entered, and this is our reversal baseline bounce. So this was the price action. Anytime price is above the baseline and pulls back to this level of support, this dynamic level of support and resistance, we want to take trades in the direction of the established trend, which being above the baseline indicates a positive trend, a bullish trend. We want to trade to the long side. Okay. That trade, as we can see, we are still in. We had a brief resurgence. We have now come back down to our entry price. And again, just looking for those higher prices on the 4-hour time frame. So that's the quick trade of the day breakdown. That trade is still open and active. It is currently in profit, but nothing, no resolution, no conclusion to that trade to speak of currently. All right. Keeping things simple, let's now get back out to the weekly chart of BTC. We will, of course, hide these drawings derived from the daily time frame. Things are relatively simple here. Again, things are looking nice for the overall kind of macro cycle for BTC, where we have had a pronounced bear market ending in consolidation, then capitulation, and we are now experiencing our first rally off of that bear market low. Now, historically and fractally, every time we put in our bear market bottom, which all on-chain and technicals indicate that this is the bottom, that we will not go below this price for this current cycle, there is always a pullback. There is always a significant pullback following that initial rally. And just the big question on everyone's mind is that rally over at 30K? Or can we, of course, get up here to 35, 37, and potentially even 40? Really impacting and utilizing that print before that slide down. Our senior analyst, Alexander Pearson, was, of course, in the chat yesterday talking about good stuff, where he was showcasing how he believes that this current price action that we're seeing is actually a Wyckoff distribution schematic. And so what we will be seeing is we will actually see a higher price here, a pullback, a slightly even higher price, and then again, that movement down into the cycle pullback, right? There's always a consolidation at the bottom, a rally, and then when that rally is over, we pull back to form a higher low, and that higher low can be scary. Like back in 2020, it almost went as low as the actual bear market low. But in this particular situation, we will have to wait and see what this particular situation presents. But yeah, that's the big question on everybody's mind, just from a macro perspective. Obviously, now that we've put in this significant bear market bottom and we've rallied, showcasing strength, will we continue to rally to 37.40, or is this the end and we're beginning the plunge down? The answer to that question is going to determine how you're going to trade this first movement. But either way, we have clarity on upcoming movements and what we should be doing to trade them. So bullet point number one is the fact that regardless of whether decline beginning here or decline beginning up here, we know and anticipate that there will be a pretty significant bleed out yet to happen in the cryptocurrency markets. And so that will unveil a good opportunity for shorting, or again, just for accumulating and consolidating more Bitcoin on the way down, right? The opportunity to buy cheaper and cheaper Bitcoin. And the second bullet point is just simply that, right? If you believe you've missed your opportunity, historically, there is always a very large pullback that will sometimes even come down to challenge with the top of resistance that we formed in our consolidation period. So again, 17,000, 18,000 is not out of the question. Even 16,000 is not out of the question. Although it is my firm belief that we will not be going below 15.5, which is where we've established our current bear market bottom, because we've never done that historically in markets. Now, of course, there's always a first time for everything, but when we have data on our side, we try to plan out for the most logical and likely scenario. Okay. So that's the weekly breakdown. Moving down to the daily, what is the market actually telling us? What is our strategy telling us to do? On the daily time frame, we do have a bullish bias. We are above the daily baseline. We don't have any trades currently right now. We are looking for a trade setup if price were to pull back down to the reversal, or excuse me, to the daily baseline. So looking for trade entries around 24,250. There is, of course, that daily not inverted, but head and shoulders pattern, which is suggesting a price target of 23.4. And that would be okay. I wouldn't be too concerned by that because why are we not seeing the head and shoulders? There we go. Head and shoulders pattern. As we can see here, the last time that Bitcoin consolidated and then had a sell-off and generated a buy the dip opportunity, we also traded briefly below the baseline. So 23.4 is just a little bit below the baseline. And so that target is perfectly reasonable given what we're seeing here now. Okay. Now, yesterday we talked about too, and it was very clear on Ethereum, where we've seen this print before, where price runs up on a high volume signature and then sells down immediately. We haven't seen that. Actually, price is struggling to move down. So this is a little bit more bullish than bearish from what we saw, from what we were looking at yesterday. Potentially yesterday, we were looking at giving back this entire movement, and that hasn't happened yet so far. So this is a little bit more bullish than bearish in my estimation. Moving down, but again, no trade signals on the daily time frame. With the exception of bottom feeder purchased this area, bottom feeder bought down into this area, and bottom feeder also is buying this breakout. So bottom feeder is suggesting higher prices right now, actually. Moving down to the 4-hour time frame on BTC, we already covered this. This is the current open trade. We have prices. We have Bitcoin consolidating above the daily baseline on the 4-hour time frame. Minx being positive. We do have Parallax flipping down to the downside here a little bit. That's okay. It's not an initiator, so we're not going to really do anything with that. But we will just be watching for price to potentially move up. Looking at this without any of the indicators on, this does look a bit like a swing failure pattern. And so for those of you, since the baseline is right here, we will, of course, want to be looking to close this trade out early at a slight loss if we do lose the 4-hour daily baseline. That would be our first indication to exit the trade. So we want to be doing that at that point in time and monitoring this trade relatively closely, or setting an alert at the very least. Hourly time frame, again, bullish bias. We haven't had a reversal baseline bounce opportunity yet, but the hourly gave us multiple good trades over here, this initial breakout. And then, of course, we talked about this yesterday. You could have either taken this trade as a leg and closed here and then got in on the second leg, or if you were using a kind of in and out strategy, you could have potentially held the entire trade through. And as of right now, nothing to do on the 1-hour time frame for BTC. All right, moving to Ethereum. Very similar structure on the weekly too as well for Ethereum, but just a little cleaner, honestly. Ethereum is, just a little cleaner. So again, kind of pronounced sell-off, and then actually higher low for Ethereum rather than capitulation event, right? So higher low for Ethereum, and we are now forming higher lows. We have not really put in, except for this, our higher high for the market, and we are just consolidating above. So we formed a higher high, and now we are continuing to consolidate. Typically, we would consider that to be bullish. There is again, Alex brought up a good point that this is what distribution looks like. But again, we also like to see consolidation at resistance. That's typically indicative that there will be a breakout. when we see very decisive price action where price is suppressed or price is sold down into, then that's a slightly different story. Let's see here. Daily time frame, excuse me. So yesterday, sorry. So on Ethereum, we actually do need to be positioning ourselves for this daily long call. We did get that confirmed long signal yesterday. So yesterday's did confirm the Ethereum daily long signal. So we are looking, we have just another primary signal after some pullback and consolidation. So we are looking for higher prices here on Ethereum, with our first stop likely being 2068 and our stop loss or invalidation being 1823. So we do have that for Ethereum going on. So bullish on Ethereum, bullish on Bitcoin. The 4 hour, we didn't really get a clean reversal baseline bounce setup here. Okay. We did, of course, get both this trade signal, and this was a candle size violation. So no reason to take this one. Although, of course, you certainly could have. You'd be slightly in drawdown right now. But right here, very clean signal right here. Pull back and then break. So this is a nice BPC break, pullback continuation. So this trade is likely closed. Of course, you could also be holding the 4 hour long open. There's nothing wrong with that. And Ethereum on the hourly, let's see here. Nothing so far. We didn't really get the signal. You thought we could have, and certainly you could have taken one of these trades and it would have been successful. But no primary signal here. Nothing as of yet. Yeah. Not in this range. Certainly over here we had this trade and we had this trade too. So either looking for a reversal baseline bounce or just buying the hourly Ethereum breakout here would be good. Okay, so daily long on Ethereum and 4 hour long on BTC. All the updates on that will of course be timely provided to all the members in the premium group. Okay. All right, let's just slow it down for a minute and take it back here. And we'll give shout outs to everybody in the chat. I want to shout out to Ron Legato. Good to see you, my friend. Mr. H. Peckham. Good to see you, my brother. Robbie White. Brian B. B-Flow is in the house. Let's see here. Rainy Days. Good to see you, my friend. We've got Peckham talking about $20 trillion printed between now and 2024. No more down points. So suggesting that we will be up only due to the fact that the federal government is signaling for QE. Boris F., good to see you, my friend. No, we've gotten, it's certainly, this is an interesting area of the market for the discretionary trader, you have, just think of the perspective. People holding long trades right now are wondering if they should be exiting their positions because they are sensing a shift in the market. However, they also have that greed that they want to continue holding these positions in case Bitcoin continues to surge. You have shorters who are looking to open positions now or buy puts. And again, same kind of level of indecision. We don't have that very pronounced market trend occurring in the markets right now. Yeah, exactly, right? So, just extrapolate those feelings to everybody else who's currently positioned in cryptocurrency at this point in time. They want to make the correct decision. They are, they're sitting there with that kind of guesswork, all right? That's why it is very important to have a system, to have a strategy. It just tells you what to do. Takes all the guesswork out of it. Okay. All right, we're going to keep today's stream relatively brief. Now I want to ask if anybody has any chart requests, and we will begin looking at chart requests. And while I'm waiting for requests to come in, we are going to take a look at some exciting assets that look here. So we're going to take a look, I think, at Arbitrum, and we're going to take a look at XRP today to get things started up. And then we will take a look at our requests. So again, we have looked at XRP quite a bit. I think we actually had it on Kraken right here. Yeah, Kraken. Yeah, daily XRP is pretty interesting here. We are, of course, pushing towards that resistance at 56 cents. From a very wide perspective, I think XRP is looking relatively juicy right now. We're going to see if we actually get this breakout and some good resolution and maybe this push toward a new ATH. But again, we've been ranging, consolidating here for quite a while. I do like this, though. Again, 1, 2, 3, 4, 5 drives to the downside. 2 takes at liquidity. Actually, only, yeah, so the second time we sweeped that liquidity, it pulled back to form a higher low. Let's see if we can overtake it on this particular movement here. We went over the EV for XRP, even at this point in time. Oh, this is the first time it didn't suggest I have a negative stop loss. Even at this point in time, we still have a 3.66 to 1. Oh, excuse me. No. Sorry, I'm not measuring high enough. Yeah, almost 8. It was almost 8 to 1. Since we've had a little bit of price appreciation, it was actually 8 to 1 when we were looking at it earlier. Your risk reward ratio for an XRP position based on whether or not we go to a new all-time high or whether we go to back to our all-time low. All-time high, all-time low. Yeah, sorry. Let's see here. All right, let's take a look at Sol USD for Robbie White. And we will use the Coinbase chart. You know, so what's gonna be the best chart? Yeah, let's use the Binance chart. That way we can kind of see these lower prices, which I think are speculative. So obviously, I mean, it doesn't take a genius to see that Solana has been in a downtrend. It does look remarkably kind of like the Bitcoin chart, except not as much indecision on the beginning move up. We can see here with Solana, just horrendous, terrible, continued pronounced bear market. Obviously culminating with the collapse of FTX here in November of 2022. And then even lower, right? So unlike other assets that following the collapse of FTX, that was it. Solana even continued to dip down lower. And of course, because there were big associations with FTX and Solana. But yeah, very, very disgusting price action here. Unable to break out above this very dominating and controlling trend line. So I would be watching heavily for that, seeing if we can get any breaks above $21 here for Solana. On the weekly time frame, again, we just kind of have this pump and current consolidation. When we see a pump and consolidation, we want to kind of assume that it's reaccumulation. So again, for that exact same reason, right? Accumulation at resistance or consolidation at resistance is typically a good thing and typically a breakout you want to buy. So watching for those breakouts at 2130 could initiate kind of a swing position here on the weekly time frame for Solana. Coming down to the daily, should we be taking any action today? Well, maybe. Solana, again, has been consolidating and chopping back and forth above the baseline. Even so, there has been some good trades in here. Let's see here. Reversal baseline bounce, reversal baseline bounce. So that's 2 successful trades there. Unsuccessful swing trade here. Successful breakdown trade here. You could have taken it on any one of these candles, but again, giving you nice momentum. Unsuccessful swing long, successful swing long. No short signal, no long signal, and short signal here. So yeah, this one was a winner. And now price has reversed back up to the upside. and we are not getting a trading signal. So on the daily time frame for Solana, I do not see any reason to take action right now. Minx is just not there yet on the 0 line. On the 4-hour time frame, there is currently no signal, even though we did break above. We pulled back and the volatility is low. I mean, you could take this trade, but if you did, since you're missing a component, you would want to do it at half risk, certainly. Hourly time frame has given us some juicy signals. We've got this breakout signal. We had this breakout signal, and we also had this breakout signal, a bit of a pullback, but ultimately successful. And now we're having another one. So you could also be going long Solana on the hourly here, looking for this continued movement to the upside. We are just getting nice momentum. And what do we have on this hourly close? We will be having a continuation signal from Minx, also a continuation signal on the previous bar from Wada Atar Explosion. So whether you want to be early and jump in with the Wada signal, or whether you want to go now with the Minx signal, but certainly there is an opportunity on the hourly time frame. Looking for take profit targets at 21.59, 21.82, and 22.06. Invalidation at 21.01 would actually be the metrics on that particular trade. Let's see here. Peckham asks, out of curiosity, what's the longest you have held a long open? I have Crow from November 15th open still. I feel like I am the bottom buyer. Wow, what's the longest I've held a position open? Well, I would say certainly over a year. So I invested, I bought, what was it, about $10,000 of this company called AbbVie back in 2019, and held that for quite a while, or it might have been 2019 or 2020, and held that for quite a while. And it wasn't until like 2022 that I actually ended up closing that position out on Charles Schwab. And at the time when I closed it out, it was like it had done an insane amount of gains. So that's probably the longest I've held a position open. Typically in crypto, I am holding trades open for certainly less than a week, and normally 3 to 5 days. I would say 3 to 5 days is my typical holding time for a daily swing trade. And on the lower time frames, I mean, usually less than 2 days for the 4-hour and less than a day for the hourly. Believer in XTZ Tezos, certainly worth a generational long view. You took not 0.862 at 10x, my man. Crypto, let's see here. We've got Crypto Bedouin. Let's go take a gander at the Dixie for you, my friend. Four-hour time frame. And you're saying, I see a head and shoulders formed from the 24th of April to the 5th of April 2023. Typically, we don't really. Yeah, I see what you're talking about here. I mean, we don't need to look on the daily chart. We can look on the 4-hour chart, or excuse me, on the 4-hour chart. We can look at the daily chart. I mean, Yeah, I mean, I would consider this a valid interpretation of this price action. I mean, let's just draw it real quick. Yeah. I think we're going to get the most accurate neckline if we draw it like this. Yeah. Okay. So we're kind of looking at something like this, which would allow us to take a measured movement. And then we just take that and we measure down from the breakout level. So this would be suggesting if this daily head and shoulders played out and gave us the measured move, that measured move would take us down to 88,771. Whoops. Excuse me. Which from current price on the Dixie would be a decline of about 15%. So looking for a 15% decline in the Dixie. If we saw a 15% decline in the Dixie, I think that people would be pretty panicked on regular news. I think that we would obviously see a surge in the Forex, and that would be a very volatile for the Forex markets. And I mean, the typical way to consider the inverse relationship between the equities markets and the dollar currency index is to say, if Dixie go up, markets go down, and if Dixie go down, markets go up. Now, I don't think the correlation is really that clean. I don't think it just works that easily. But yeah, I could certainly consider this a valid head and shoulders pattern. And what you do with the valid head and shoulders pattern is you look for validation and invalidation, right? So prices back above the right shoulder would typically be an invalidation. And then the breakdown of the neckline, which is currently sitting at a little bit above 100, would be the validation you're looking for, where you want to be looking to take action on that particular position. But the movement from the 4th of May this year seems to have invalidated it. Yeah, so it's not, I wouldn't necessarily agree with that. It's not always going to be clean. And I'm not a huge chart patterns guy. All right. So even though I've literally read the book on chart patterns, I did not write the book on chart patterns, and I typically don't use chart patterns in my actual real money trading. These are patterns that are helpful for giving you a feel of what's currently happening with price. So what we know about head and shoulders is that this is a pretty common pattern that you'll see when things are exhausted, right? Where we have a big run up. That's what the left shoulder is designed to indicate that we've been having a run up. And then the head is designed to indicate that at some point during that run up, we reached a blow off top where momentum was unable to continue carrying an asset or an index in that direction. And then we have the decline, and the right shoulder is designed to showcase for us that once the initial selling from the peak was over, there was an attempt to continue moving prices up, or an asset up, or an index up. But for whatever reason, we were unable to do that. And as prices come back down to kind of the what's called the neckline in a head and shoulders pattern, we feel that if the neckline is lost, then all these investors who purchased up here will see that, and that they will be panicked and they will begin selling, which will kind of initiate and add fuel to the fire to the sell-off, which is why we take these measured movements. If price is able to go from here to here, we assume that price will go from here to here next, is the typical way that you would justify or think about a head and shoulders pattern. They're not always going to be perfect. Every single one you look at is going to be different, and every single one, if you ask somebody to chart the same head and shoulders pattern, they're going to chart it differently than you. So as a trader, I would not get too caught up in trying to find the perfect pattern or agonizing over it. I don't think it's going to make you any more money, and it's not going to be helpful at the end of the day. What you just want to use this as a reference to identify your strategy. What are you going to do when? So all of this is great, but the first question we need to ask ourselves is, so what? What are we going to do based on this information? Well, are you going to be trading some derivative of the Dixie? Most likely not. Are you going to be using this information or this price action to influence what activity or what actions you take in equity markets or in cryptocurrency markets? More likely, yes. So again, if we're just using the traditional methodology here, if we break out above the right shoulder, that would typically indicate that this pattern has been invalidated. And sometimes you'll have so what's interesting about that is that this can transpose into a double bottom right? So think about this. If we break out above the right shoulder, well, we're not looking at a head and shoulders anymore. Now we're looking at a W or double bottom pattern, okay? And that has its own way to trade. The other thing we can often see right shoulders transpose into is depending on the curve. So this looks very V, but if there was a more pronounced consolidation period, we could have an Adam and an Eve pattern, or what this can also sometimes transpose into is a cup and handle. All right, if we have that long rounded, and then we go up to form the right shoulder, and then we dip down just a little bit and then break out, which would have kind of looked like this, right? Then sometimes a head and shoulders pattern can transpose or transform into a cup and handle, for example. So again, either way, the important part about this is what actions are we going to take based on this? So obviously, just off the top of my head, if we saw a breakout above the right shoulder, we would expect this to kind of be a transposed double bottom pattern or W pattern, and we would be expecting higher ticks on the Dixie, which would likely indicate lowered asset prices. And then if we break down below the neckline, we're indicating that the Dixie is completing the head and shoulders pattern, and we want to be more aggressive with our risk on assets. Okay. All right, so great questions, guys. Really great questions. I really appreciate that. All right, we're going to start heading for the door. All right, guys, we're going to start heading for the door. I want to thank you guys so much for joining me today for this lovely live stream on this lovely Tuesday afternoon. Hopefully you guys have a fantastic rest of your day. I hope you guys have a profitable rest of your trading day. If you guys have any questions, comments, concerns, sarcastic remarks, and/or death threats, feel free to leave them in the comment section down below. I will respond to them as quickly as I can. Make sure to click the link in the description. Go download your free guide on on the 5 mistakes holding you back from profitable trading. I realized I'm in the wrong scene here. There we go. Click the link down in the description. You can get access to our free guide. It's the 5 most common mistakes I see traders make, and all of my advice and information, actionable information on how to improve and overcome those mistakes and challenges in your own trading strategy. Links down below to everything you could possibly need in life, and I will see you guys tomorrow. Same crypto time, same crypto network. Cheers and stay safe trading.